Welcome, everyone, to Global Markets Radio Week Ahead. I'm your host, Andrew Spanton. Sunday, April 29th, 2012, 5 p.m. Eastern. No real major news over the weekend. Markets opening relatively unchanged, pretty much from Friday's close. Once again, the markets continue just to go higher, defy economic numbers. It just doesn't make a difference. It's a bloody joke. You know, one of the things I want to talk about today is the low interest rate policy, ZIRP, by the FOMC. And how has it really helped the average American? How has it really helped those unemployed? What it has helped is companies restructure their debt and now have debt at ridiculously low rates. And what that has helped is corporate profits surging. Is it because of demand? Maybe on a global scale, but certainly not in the United States. Obviously, if you're a cloud company or Apple, that's another story. But even so, Apple, 80% of their sales, I'm pretty sure, is coming outside the U.S. So while the Obama administration and the Federal Reserve and the Treasury all have this great concept that, hey, we lower rates, it'll solve all the problems, it just isn't working. As we see by continuing claims, as we see going to see this week with the non-farm payroll report, companies are not using those profits to hire workers. Companies are using those profits to make more profits, to buy back stock. When the patriotic thing to do, because rates are so low, is to maybe hire more workers than they normally would. Maybe do the right thing. Hire an extra worker with all those extra profits you're making because the Federal Reserve has kept rates so low for so long and will continue to do so. The trickle-down effect is just not working. I want to do this as one of Andrew's rants. But, I got to tell you, it just, to me, blows my mind that no one talks about this. No one stresses how, you know what, maybe this should be a little add-on to low rates. Well, if you're going to get low rates, you got to do more the moral thing. And it's not even necessarily going to kill corporate profits. Maybe they won't make as much money. But greed is good. Shareholder wealth, the stock market, which is only a small percentage of the country. It's certainly not the average Joe making $60,000 a year. The average Joe living paycheck to paycheck. The rebound in the stock market has not really benefited them. Once again, the 1% continue to make the money and trickle-down economics, while in theory should work, it just isn't trickling down. And let's just hope that this doesn't lead to more class warfare, to more sort of, not revolution, but maybe. Because in thinking about it, it is not right. And believe me, I am a capitalist. I am a complete believer in free market, small government, let the government stay out. But the Federal Reserve, in doing what they have done and continue their policy of, is a recipe for complete disaster. Because once the interest rate genie is out of the bottle, because we all know it will be at some point, company earnings are going to collapse. Stock market's going to collapse. And the average guy is going to get hit even harder. And then more layoffs. I would rather have taken the medicine right away, let everything collapse, and then rebuild and have rates at a normal level. But this low rate environment is only helping the haves. It's not helping the small businesses with bad credit. It's not helping the average guy get a car loan at low rates. It's helping those that have and corporations that have. It's a recipe for disaster. It's just a matter of when the bond vigilantes or when the U.S. becomes Spain as far as bond auctions are concerned. And it will happen. I have no doubt about it in my mind. Absolute 100% guaranteed. Timing is everything, though. And right now, the bulls are in the house. How can you fight this tape? It's unbelievable. GDP, 2.2%. Disgusting, disgusting number. Yet, hey, Bernanke to the rescue. He'll just print QE3, and we'll all be saved. It's so stupid. It's a bloody joke. But when we look at this S&P chart, I know it was a 5-minute rant, but hey, I think it was necessary. And it's true, what I'm saying. Absolute truth. Outside candle, S&P, taking out the 61.8% golden retracement if you're a Fibonacci person. How can you fight this? Listen, corporate profits continue to do well, and it does make sense. And again, I would say it's not coming from demand. It's coming from a number of factors. Demand is definitely one of them. Certainly, the consumer in the United States isn't as robust as they were. But when you add in the factors of low rates, companies refinancing at record low rates, negative rates, really. IBM, did they sell a 100-year bond for 1%? Some stupid number a year or so ago. But when we look at this, the S&P, hey, it's got to go up. But at some point, and we're getting close, the Fed is pushing on a string. Their policies will not work. There's just so much you can squeeze out. And in my opinion, there's always going to be companies that do well. Even in a depression, you always have innovation, companies that are the hot product company like Apple. But that doesn't say much for the other 499 companies in the S&P 500. 400, let's say. Because at some point, we come home to roost. And that day, in my opinion, is coming. But for now, this chart, weekly chart of the S&P looks gorgeous. How can you fight this? Outside candle, flag, we pull back to the EMA. Even double bottom here. It certainly looks like we could explode. And you do your channel line also. Who knows? 1,500. Why not? Certainly by measuring the move, one of the things that I've consistently always done, say 1358, 1425, I'm rounding. $65 plus 425 gets us almost to 1,500. To the moon, Alice. Now we have a big week coming up, people. A big week. We got rate decisions out of Australia, ECB. Australia's supposed to lower rates. But again, look in this S&P chart. Now, could we stall? Absolutely. I don't know if we're going to hit that level. I don't necessarily believe it. It's a bunch of bullcrap, in my humble opinion. We get a ton of London numbers. Those are going to suck. Get some U.S. numbers at the beginning of the week, ADP on Wednesday. Could we make a double top? Hell yeah. Could we reverse? Absolutely. But I'll tell you, a lot of the risk-on trades besides the yen, because the yen is, in my opinion, reacting to bond yields. And that's why we're seeing the yen carry trade not even actually go down with the stock market going up. I get it. But this outside candle in the S&P looks gorgeous. Can't fight the tape. We look at the dollar index. It is completely breaking down. We have not been in Momo territory in a long time. Obviously, this doesn't look like a complete breakdown as of yet. But boy, we broke some nice support last week. We did not hold 79. We're under 79. And we're due for some momentum. And I'm nervous that this momentum is going to be on the dollar downside. Now, could we reverse this week? Absolutely. The wedge, in my opinion, usually break it down or break it out to reverse it and break it the other way. The first move is a false flag, you know. The first move is not the right move. But doesn't mean the first move cannot go a long way. So when we look at this dollar index, it looks like it's rolling over. Stocks are breaking out. The market's going to anticipate Bernanke print, and he's going to keep printing. And that's thus going to send the dollar collapsing. And we look at this euro dollar, and we see that still hasn't broken out. That 133 gets taken out to the moon, Alice. And so many people are short this, which only leads you to believe they will get squeezed 100%. Believe me, I'm a bear, but you can't. How can you fight this? We're going up. And we got some nice resistance. Certainly, hey, we take this out and we get a melt up. We have other channel lines. It's about 136, and that coincides. 135, 137. And if we do Fibonacci from here, euro dollar pair, notice where that spot is. Almost 138. They will take the shorts out and squeeze the crap out of them. And that's the way it looks like it's happening. Again, same spot. Channel line, 50% retracement. All we got to do is take out this 133 and close above it, and we're gone. Gone like the wind. Sterling is breaking out, and they have had disgusting numbers. I get it. You know what? We take out 163. Holy crap. Gone. Like the wind. And then when we take a look at, we zoom out, remember that the pound was once double par. We could be talking about a melt up to 166. Easy. We are at monster channel line spots. And this market has been in a trading range, barring cable, for months now. And it looks like we're ready to fly. No matter how you slice it and dice it, that's the way it looks. Australia's supposed to cut rates. Well, what if they cut rates and say they're done? Aussie's going to fly. Outside candle weekly chart. Broke this whole downtrend channel. For 3 weeks now, we have not broken down. We've had disgusting numbers kind of come out of Australia, and it's gone up. What does that tell you? We're going up. So, yes, while we could pull back, we could rally, and then the RBA, that's Monday night, Tuesday morning, Australian time, certainly could have a pullback. You know what? We got China PMI from China this time. The Chinese government releases it. Let's see what that number is. But when you look at this Australian dollar, outside candle, you just do your Fibonacci. And we'll look at a 106. Easy. It's only 150 pips from here. But hey. So you want to short it? Wait for 106. I think it's a bloody joke. But again, the correlation between the stock market and the dollar index is not breaking down. Sometimes it goes through pauses, but it always plays catch up. And the bottom line, if the stock market's ripping and they're anticipating more printing of money and bond yields go lower, dollar's going down. And dollar yen, once again, looks terrible. Weekly chart, outside almost candle. Again, the 79.50 level looks like easy. And there you have your fib. Breaks through 79. We're going lower. Obviously, there are outside factors that could change everything in a New York minute. That's why you want to follow me on Voice of Forex Twitter, Voice of Forex YouTube, Voice of Forex Facebook, or email me, info@globalfxllc.com. You know I have a premium service. Obviously, they'll get it first. But until something happens, this is the way the market's going to trade. Now, maybe second quarter earnings going to suck. I think that will happen. And what's amazing is Canada's going to raise rates. I get it. I get it. Australia's going to lower rates, but Canada's going to raise rates, and U.S. GDP sucks. Housing numbers are a little bit better, but housing still sucks. Talk to people in Atlanta. But this dollar Canada is breaking down 100%. This baby looks like it wants to melt. Certainly 95. We get Canadian Ivy this week. Manufacturing number, that should be a big number for them. And we got GDP tomorrow, Monday morning. It's supposed to be up 0.2%. That comes out in line. Hey, they're doing just fine, even with U.S. GDP not good. So you can see dollar Canada really get hit. Shangri-La. Labatt's. Unbelievable, you Canucks. You're doing just fine. Listen, the Canadians never had a housing bubble. The Canadians have a very conservative mortgage industry that never got caught up in the bubble. Not like Australia. But Friday we do get that Canadian Ivy, and that could be interesting for a possible 64.2 versus 63.5 they're looking for. So Canada, dollar Canada looks great to the downside. And gold. Nice reaction on Friday. Bad U.S. numbers. Gold goes up. Gold, another outside candle, looks like it might want to break higher. Gold might make a run for 1,700. I got a nice channel line right here. Obviously, the election coming up in the United States. Maybe Bernanke won't do as much. Twist is ending in June. And he might come up with something else. It's not political. If the numbers are bad, that's enough for Bernanke to print. And this man is going to go down as the worst central bank head we have ever had. His policies, while have saved the situation for now, is going to result in such dire consequences. The depression is going to look like Shangri-La, in my opinion. What if yields go up to 15% again? Can you imagine the debt service on that? And how about the loss in the trillions of dollars in treasuries the FOMC owns? What about the losses on that? It's sickening to think what's going to happen. Euro sterling continues to look bad, breaking down. That's good for cable. Pound dollar continue to fly. And I think one of the things we saw on Friday was a big reversal in some of the carry trade on the other side of the Atlantic, Pacific. Pound Aussie, pound Kiwi. While it wasn't pretty, this is still a nice little reversal in my opinion. We didn't get up to double par. But if risk is now back on, if the stock market's going to break out, if they're going to fly into the ones that are high yielders because they're not going to go to 2, Australia. They might go to 4 and be done, maybe even 350. Still going to be higher than the U.S. China's still growing. So I think this pound Aussie, pound Kiwi, while the sterling is going to be strong, New Zealand looks great. Oh, my alert. I really thought it was going to break there. God. Never. New Zealand continues to have these wicks. Now, if risk is back on, this baby's going to fly back up. And don't forget, we were as high as 88, 50. Who says we can't go back up there? Who says? And we pull back nicely, measure the move. Certainly a move to 83 and change. Looks like it's going to happen. So I took a lot of your time. Dollar Swiss, let's take a look at that. And then I'm going to end this because I'd like to go over some more pairs, but we're at 21 minutes right now. And I really had to talk about the disgusting policy of burn your ass off. The bearded collie, who is the worst central bank head we've ever had. He sounds like a scared weasel when he talks. Because he knows that he's destroying America's future. But he doesn't care. It's disgusting. And he's blowing the world's future. He's giving it away. Heaven help us if rates ever explode. So again, look at dollar Swiss. Dollar index looks very similar. We haven't even broken yet. Nice little reversal candle closing at the lows on Friday, right at that channel line. It looks like we want to break big time. And I'll tell you this, Euro Swiss, this thing is just begging you to short it. It can't even rally after breaking through 120. But we need a calamity in order for that to happen. Big time. And that's it. All right, everyone. Again, cable to the moon. Dollar index looks like it's breaking down. And we should see a lot of these other charts break the same channel lines. These same ones that we've been drawing. And this dollar index, we could be talking, again, do your Fibonacci. From the low to the high. That could be 76. Info at globalfxllc.com. Andrew Spanton. Global Markets Radio. I admit it when I'm wrong. And can't fight the tape. As much as I see the future, short term, bears go back into hibernation. Bye-bye.